going wrong? Is it domestic fundamentals? Are these global triggers? What are you attributing all of this to?
Well, to start with, of course, the problems were global in nature, and we have been, documenting that this really is a global bear market. It's a global bear which no one understands right now because of various issues, and right now that's taking toll. But for the last 2 days, you'll have to say that a lot of domestic factors have also contributed. Today, for example, the market had no business talking about global cues. When the markets were closing at almost a low point, the European markets were up 2%. So today and for the last 2 days, the big trigger has been the earnings, especially from PSU banks and the kind of de-rating that we have seen in the PSU banking space. Also, the cash market volumes rose in trade today in the second half. What was interesting today was that we had one recovery today at around 230, again because of what happened globally. But that was sold into, and that's the problem for this market now, that inherently it's become an extremely weak market where all rallies are sold into. Rallies last only because bears decide to book profit, and that's the only reason you're seeing any kind of intraday rallies as well. And the big problem is big stocks are cracking now. HDFC, Tata Motors, ONGC, all these stocks were down big time today. HDFC was down 4% and is threatening to break 1100, something it hasn't done in 2 years. Look at banks, PNB, BOB, SBI, all these stocks were down quite a bit. And outside the index, a lot of large mid-caps are falling. All of these are FII favorite names. REC, PFC, Aurobindo Pharma. The list is long, actually. I've just taken 3 names because that would signify the kind of pain that's there in the system. And look at the kind of volumes that these stocks traded today. That was telling you that the fear factor is well and truly intact.
Anuj, the other big question, $1 million question, what next? Are there any triggers that could heap more pressure on the bulls? And are these going to be domestic triggers, whether it's the union budget, or is it all going to be global in nature?
Well, there are a couple of triggers that you could watch out for, but really the important points to watch out for now, the most important would be to watch out for the domestic flows, because, that's the big risk now. What if domestic redemptions start to take place? Anecdotally, we spoke to a few fund managers, both from insurance companies and mutual funds, and the sense we got was that inflows have slowed down, even though redemptions have not taken place. So that becomes the big risk. Local investors have started to lose money. Last year was a good year for portfolio investors. This year, we have seen portfolio investors lose a lot of money. NAVs are down. That's the big risk for the market. Tomorrow, SBI numbers, that could really be a big trigger. It's going to be a massive trigger along with Tata Motors numbers. So that's something to watch out for. There would be some talk of a pre-budget rally also taking place over the next few days. But really, for that to happen, you'll need to see some kind of stability in global market. And 3 or 4 days of good global cues, that could maybe change sentiments. The bear needs to be scared. And that's how, you see any kind of rally. Otherwise, it looks like it's going to be one way down for our market.
Right, thanks, Anuj, for joining us with that. So there you go. Those are the triggers that we can watch out for. They're likely to take terms for Dalal Street.